Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the market has opened and we can see that the XY dollar index is trying to recover after this massive fall. So when the market closed, DXY was around 102.20 and right now it is standing at 102.45. Dollar index is showing recovery, as a result of which we can see that other pairs are also going for a little bit of correction. But if you look at the chart of gold, then we can see that in comparison to DXY, gold is not in a clear mode of going down. Okay, so what are the levels for DXY today? So as we can see, the DXY is going for recovery right now. The first level will be 102.5 to 102.55. This is the first resistance for DXY, or this will be the first resistance because of FIBO. Here we have drawn FIBO to derive this level of 102.50 to 102.55. If DXY reverses, then we will get the confirmation that our FIBO is working. In case market breaks this level of 102.50, then the next level to watch out will be 102.75. Around 102.75 we have the second resistance for DXY or dollar index. Because of FIBO 38.2% retracement level, along with that we also have the 100 moving average around this area. In addition to that, we can also say this was the previous support. So previous support will also be acting as resistance here. So 102.75 to 102.80 will be a big level for DXY if DXY succeeds in breaking the level of 102.50 right now. So enough talk about DXY. Now let's head towards the chart of gold. So the overall levels on the chart of gold have not changed much, and we can see that gold is standing at 1922. Market opening was very important because during the closing hours of Friday, market was very volatile. As a result, market opening was very important to us, and we can see that more or less the volatility of the market is normal. Market is not too silent but not very volatile also. More or less this type of volatility is quite expected from the Monday market. So the first level, the first level here already gave us a few pips. Probably you have missed it. I also missed it because I was sleeping. Okay, it was around 5 a.m. here. Okay, so the second level to watch is 1918 to 1919. This is the next support on the chart of the gold here. And here also we can expect a profit of 30 pips, because if market comes down to this level, we can at least expect a good bounce here. We have FIBO 50% retracement level. Along with that, we will also be having 50 moving average. In case market breaks it, in case market shows volatility, then obviously this may not work, and then you need to focus on 1914 to 1915. This is the second support on the chart of gold for the day. And here also we can expect a temporary bounce. If market bounces, we can expect to make around 30 to 40 pips. 30 to 40 pips from 1914 level, because it is a little bit stronger in comparison to 1918 to 1919. And if you're looking for detailed analysis, if you have not watched my previous video that I uploaded on Saturday, then please watch the video that I've uploaded on Saturday, because I do not want to repeat the same stuff and bore you again. So the overall levels are still very much intact. A strong level of buyers and sellers are still the same. The strongest support on the chart of gold is still around 1900 to 1903 and 1892 to 1893. These are the strongest levels, and already I have explained many times why they are strong. I do not want to repeat and bore you. Okay, so these are the strong levels. So let's look at chart prime, and these are the signals generated by chart prime last week. We can see that few signals have done a fantastic job where we could make 50 to 60 pips on 15 minutes time frame. But under normal circumstances, when the market's volatility was low, so on 15 minutes time frame, yes, there were many signals where we could have made around 30 pips. 25 to 30 pips on 50 minutes time frame is quite decent and also very much realistic. And yes, as you can clearly see that it does not repaint, so the accuracy of the tool is also very good. If you follow proper risk management along with the signals of chart prime, then definitely you can expect to make some good money. Apart from the signals on the chart, you can also see that the oscillator also generates signals. The green signal at the bottom tells us about the buy, the red arrow at the top, it tells us about the sell position or the sell opportunity. And moreover, it also helps us with divergences. If you want to trade on the momentum of the market, then the divergence identification is very useful. And as it's an oscillator, it also marks the overbought and oversold levels, not only for buy and sell signals. If you really want to take your analysis to the next level, then chart prime is a very useful tool. Apart from Market Oracle Pro and the prime oscillator, they also have Market Dynamics Pro for chart pattern detection, smart money concept, etc. If you're already using chart prime, then today the volatility of the market should not be very high because we don't have any news. As a result, you can go for buy and sell positions with the help of these dynamic support resistance. Yes, the lines on the chart are dynamic support resistances. You can go for buy and sell accordingly. Apart from the buy and sell signals, along with it, if the oscillator also marks the buy and sell signal, you can go for a buy sell signal. But as the volatility of the market is not very high right now, you can expect a profit of 25 to 30 pips. So right now you can wait for buy and sell signals from the Oracle Pro, but it's better to look at the buy and sell signs from the oscillator pro right now, as the volatility of the market is not very high. And obviously the dynamic support resistance is clearly visible and will be helpful if you already have purchased chart prime right now. And if we look at chart prime, then right now they are giving a 30% off. So it's the best time to purchase chart prime if you really want to elevate your game to the next level. You can scan the QR code on the screen, or you can also check out the I button on the screen, or you can also click on the link in the description box. Feel free to check out right now. On the other hand, if market shows upside, the first resistance will be 1935 to 1940. This is the first resistance on the chart of gold as of now, or you can also say the immediate resistance on the chart of gold. If market breaks 1940 level with volume, we can look for a buy above 1940. Around 1941 we can expect a profit of 50 pips, 50 to 60 pips, and we need to exit by 1950 because 1950 will be the second resistance on the chart of gold. So the overall levels are still very much safe, but internally we can see that these are the levels we need to focus for today. And we can already see the market is trying to take support around FIBO 38.2 here. So this is a kind of a confirmation that the FIBO setup we are using is working. So if not a trend reversal, at least you can expect a minor bounce from this level. If market bounces, be realistic, exit by 30 pips, and you should be doing good. In case it doesn't work, in case it hits our stop loss, try to book your loss. Okay, because there is a big problem that when the trade goes against us, we do not want to accept the loss. Okay, and the trade becomes a big headache later on. Don't make the mistake, because see, profit and loss is a part of the game here. Okay, risk management is the only thing that keeps a trader profitable. Okay, I don't want to lecture on risk management right now. Anyways, that's all from my side, my dear friends. Watch the video that I uploaded on Saturday for detailed analysis. Follow proper risk management. This is my analysis. I can be wrong as well. Do not gamble. Okay, be a trader, not a gambler. Bye-bye.